So we will start by taking a closer look at the operating bank, which is about $110,000. And as you can see, we do have what we call prepaid insurance, and we do have accruals. So this prepaid insurance expenses that has been paid in advance for service rendered. So when you take a look at our prepaid insurance, you can see that of about 17,569. That means that the insurance policy has not expired yet. We do have about 3 months still left for paid insurance, so which is a good thing for us. And as you can see here, we do have what we call accrued liabilities, accrued water, gas, and all that. The reason why they are accruals because they are estimated. This is an amount that we do owe, and the reason why we do estimate it because we have not received the invoices yet, and we estimate it based on past usage. So when you see here, this is that's really what that means. So as you take a closer look at operating bank, we have about $110,000. But then when you come to operating fund, you really see that we do have a deficit of about $22,037.16. And the reason is quite simple. It's because if we were to pay all our accrual amount that we owe today, that means we will be in a deficit of about $22,000. And ideally, it is better to have about a month to 2 months of worth of condo fees as a surplus. And the reason is that it will help with cash flow and ensure that we are actually able to pay our liabilities on time. And with the deficit, this is an indication that we're actually experiencing cash flow difficulty. So if you see page 3, you can see from the financial statement, you realize that we do have about $22,000. So what I recommend that we do is let us take a closer look at how we do really spend, so that we can prevent overspending, and by so doing we will be able to kind of reverse this deficit from sitting there. So that's one of the things that I would recommend that we need to take a quick look at. And also I would like to bring to your attention if you look at it, we do have a reserve fund of about $4.4 million. And if you look on top here, we have a reserve fund bank account where we have about $1.7 million. And the reason being that we do have some expenses that we have, some project that we haven't done. If you look at the cash flow, there is a cash flow. We're supposed to be doing, let me just take window frame and panel painting and all that. So those ones have not been done. And that's why we do have quite an amount, as you can see, a reserve investments of about $2.8 million. So the reason is that we do have investment that's actually growing. And I think what we need to do is we need to take a look at it and see if some of them have grown and probably expiring. And then we need to take a closer look at that. And I also recommend that these projects that we didn't do last year and this year, as you can see from the reserve fund table here, it's very important that we do them. We do them. As you take a look at on page 5, we actually do. It's a healthy balance. To be quite honest, it is a healthy balance of having a surplus, but we just have to make sure that we do get that one done. That's why we do see a chunk of money actually sitting in the reserve investment. So these are some of the things that I would like us to take a look at it as soon as possible, and maybe do them and get them off our table and our checklist. That's done. So that's one of the things that I think we need to look at. That we do also see account receivable assessment of about $42,000. $42,392, and as you can see from the financial statement on page 8, you do see that owners not owners that are owing, just one owner that's owing right now, and that's unit 713. And what we've done is I've asked the account receivable department to send a notice to them, a lien notice, so that we can actually get the amount real quick. But the other ones is coming from all the other condos that are attached to our corporation. We have co-op, we have so these ones here are what is owing, and I've instructed the account receivable to look into it and ensure that we do get those funds as soon as possible, because we do need them. That's why we do see what do you call it, account receivable assessment of about 42,392 here. One of the things that I'll bring it to your attention also, I'd like to bring your attention, as you can see, we do have like a holdback payable in the reserve for about $36,073, and the reason is that is a CDC contract that we did, and we are waiting for the engineer to give us that's the holdback. You know, you have to hold 10% to ensure that the contractor pays all his subcontractors, so that they cannot put a lien on the corporation. So once the engineer gives us the go ahead, we will release that amount, which is about 36,073 cents. So that's what we are actually looking at here. So there isn't that chargeback receivable. This yes, unit 108 and 2248. We did some work there, and we actually will be getting those amounts also back from them. But yeah, so far that's really what we need to know, and I want us to take a closer look at some of the variance report that I sent. You see, if you look at the variance report, you see legal where we are over about $29,606.83, and as you can see from the audited financial statement, page 12, we do see a claim going on. Number 10, legal proceedings claims. There has been a claim against the corporation for $75,000 respecting the termination of an alleged management service agreement, and you can see also you also see B there, where there's a claim against the corporation for an amount of $36,000 respecting the invoices rendered. We will have, that's the reason for this, and so the legal proceeding is also that's why we actually have that amount. We are overboard by year to date of $29,000. We will look into these things, and we will try to avoid situations like this, so that we will be able to have more in our account. I see here also AGM and meeting, where year to date we are overboard by about a deficit of about $6,132.41. And I'm thinking, if because of our meetings that we have in this kind of amount, I think it's better for us to have Zoom meetings where we will be able to save ourselves from incurring a lot of charges. I do see here that we do have plumbing, which is about, we are running a deficit year to date of $26,000. It seems like we're having leakage problems, and I think this is something we need to address quick. If we are spending that amount of money for leakages and all that, I think we need to resolve that one as soon as possible. Bring in engineer, maybe do an assessment and get it done, so that we don't keep on patching the situation, but we will really resolve this situation as soon as possible. So I recommend we do bring something like that, bring an engineer in, take a look at it, and assess why we are having issues like this, and really embark on resolving them, because these amounts are very hefty amounts that we are paying. I've also seen here, as you can see on the variance report, we do have fire safety non-contract, where we didn't budget the current month, but then we have year to date we are at a deficit of $28,822.66, which means this one here, I've actually looked at the GL transactions and I haven't seen any why we're having that. And so what I've decided to do is a PA, that's a property accountant, is not available at the moment, but once he comes, I will sit down with him, go through these things and find out why this issue is. Probably it's a wrong GL that was kind of placed there. So we will look into that and I'll get back to the board on this issue. So far that's what I would like us to take a look at. If there's any questions, please you can ask if there are any more questions. Thank you.